follow up with this video on the option plays in Yahoo. Um, Let me go back to where I started. So these are all the option plays for SPY. All right. How do you get to this? Yahoo Finance. Under Yahoo Finance, you put in the chart that you want to see, and you click options right here. Simple as that. We'll give you the option for whatever day that you're looking at. You can go as much as a year, 2 years away, and look at that as well. You can get it. You get a list, and you or a straddle list, whichever you like. But real quick, today, this is actually, the stock market is still even active right now. It's about to end soon. But today, let's say, okay, well, 447. Let's try this one. The 447. 171,000 transaction on the SPY. Right now, you click on that. It tells you that today's low was $8 and the high was $196. The low of the day was $8. The high of the day was $196. Yesterday it went as high as $340. Today it opened at $168, went down to a low of $8, and went back as high as $196. This is today. Now let's look at the chart. You're going to go here. This is the chart for the option. This is the call option on a SPY for $447 in ending March 22nd, ending March 25th. Now you're going to go to your full screen here. I have, what do I have here? 3 MA, 8 and 21. Now, I have the interval as 1 minute, and I have the MACD RSI. It's pretty much standard stuff. But if you look at this, you'll realize that this is a call option, right? If you let's take a look at 9 o'clock this morning. You see here, you go over here. You realize this makes it a little bit bigger, so you guys can see this. We have your 8 and your 3. Your 3 is under the 8 AMA. So the 3 is lower than the 8. So that's not good unless you're doing a put option. So you want to wait until your stock is giving you a direction that it's going up. You just have to be patient. It's going low on the open, and at 10:03 a.m. now you see where you have this big green candle that just created the lowest low at that time this morning, and then it started to cross up. The 3 cross above the 8, the 8 cross above the 21. So now your RSI is telling you it's above 40. Your MACD indicator is green on the histogram right here. Your purple line is above your goal line. Now look at this. This is where it crossed over right here at 10:05, which is a pretty common time for stocks to cross over. Believe me when I tell you, it happens a lot at 10:05 for whatever reasons, I don't know. But it's good to know this. So now you here, the price of it here was $114 low and high 123. So if you had gotten in here, because your lines are all pointing upwards, RSI is pointing upwards, MACD is pointing upwards, green candle, you have a lot of green candles here, more than red. You have a big green candle here, and then you have 2 consecutive green candles, and it goes above your 3 MA right here. That's a good indication that you can get in. Now you have to remember, when you are doing this, you're not thinking about the money you're making. You're thinking about the indicators on what they're telling you, what the price is doing, the price and the volume, what is it doing. So these are the things you're going to be thinking. the next thing you're going to be thinking is, okay, the price and the volume looks good. The candles look good. The direction look good. Now, once I go in, how much do I want to make? You have to think about that, and you have to also think about, once I go in, how much do I want to lose? How much am I willing to lose? So if you go in here at let's say $130, let's just say $130. How much are you willing to lose? If you're willing to lose 10%, that's going to be $13. 20%, $26, and so forth. You get to decide for yourself, because this thing can change. You don't know what is to come after this. Me showing you this after the fact is nice, because, oh, we can see that all the candles went up. So that looks nice. But when you're actually here, you don't know if the next candle is going to go up. Nothing is 100% guaranteed. No matter how much indicators you have, there's no perfect system. None whatsoever. It's just looking for clues that will help you to make a better informed decision. And in this case, you want all of your EMA lines here to be above each other in the order. In the order it's supposed to be 3, 8, 21 in this case. And these lines, they're coming from low, crossover, they're going up. This is good, RSI is going up. So now you enter here, let's say at 130, and you see the next big green candle, you're happy because you enter 130, now it's 138 high, and it goes up again 147 high, and it goes here 148, and then it come back down to 146, and you start to get nervous. Don't get nervous. Your lines are still above each other here. This line is still going up at this point. Now there's a pullback. Yeah, your pullback, as you can see, came and hit the line 21. It didn't go below it. It just touched it. So there's no reason to get excited. Your RSI pulled back as well right here. See the pullback. Pullback right here. Come on, go over. There you are. It is a pullback. It's called a pullback. It happens. People take profits. People want to take whatever little profits they can. You can too. You can be a part of that pullback. But I would hold. The reason why I'd hold, because the yellow line is still above the green line. It's touching, but it's still above it. Your green line is above your red line. You understand what I'm saying? Your green line is above your red line. So me personally, I would stay in. And then it touches it and continues again. Now, what will give you a good indication after this candle here touches that it's going to go back up? The next candle for 1 minute, in 1 minute, crosses almost above 4 candles. The last 1, 2, 3, 4, 5 candles it went above. You know what that tells you? The buyers are getting aggressive. And if the buyers are getting aggressive, more than likely the next candle is going to go up. So you wait, and you see that the next candle go up, the next candle go up, the next candle go up. Now you get to hear another big red candle. What do? Well, now you're seeing that it's crossing, the MACD is crossing the 0 line. But you have a red candle, all red coming all the way down. You can take your profit here. That's a big red candle compared to these other ones. This is the big one. So you can take your profit here. It's up to you. But me personally, I would still wait. Because even though you got to this point, and at this point it's $185. Now you got in for $100. It's $190 on the high. You got in, and 1,000 people made transaction on there. Well, I don't know how many sold. Some bought, some sold. Because in order for these to be sold, somebody have to be buying. So whatever amount of transaction happened here, total 1,003. Now you see here that there's a pullback here. There's a pullback on the RSI, but there's no showing of a pullback on the MACD. Still above each other. So you can actually stay here. But me, if I see a first pullback, I question the second one, because by the time you get to a third pullback, it's going to pull back really heavy. So I will chance a first pullback and watch and see. But when you get to the second, I will have to really think about if I want to take profits here or lose money on the second pullback. And this is what these are called. It go up, it pull back. 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 Now, if you look at this here, the first pullback hit the the red line here, 21. It went up and it created a resistance. It couldn't break above this. Nobody else wanted to buy options. Then it pulled back. Now, as you can see here, pull back to a high of 170. That's $10 you would have lost on your thing. That's not a lot. I mean, it can be for some people. And then it started up again. Here, people started buying again, and then it went back up to $186. And then you have the third high here that was resisted. Now you got one resistance here. After you got in, this is after you got in, that you're counting. After you enter your trade, one resistance here, second resistance here, third resistance here. What do you think is going to happen after that? More than likely, it's going to go down. And it did. It went down again, and it broke the 21 line. Big warning sign here. Now it broke the 21 line. MACD crossover. RSI create a new low. Let's see where this is. It created a low that's almost equal to the low right here, which is telling you that there's a divergence here now, because this is a higher low on the chart. This is a low that is either lower or equal to, let's see what this is, 4718, 4709. So this is a low. It didn't go as low as this one, but it's low enough to tell you the market's going to change. The trend is going to change. That's what this is telling you right here. This trend right here, it's going to change, because it's coming back to challenge a low from way back here, which is extremely low on the price chart. It's not as low here on the price chart, but the low on the RSI is almost equal. That's not good. That's a big warning right there. Because if you see a low that's equal or lower and the price is going higher, get out. Don't even question it. Don't even think about it. Don't even think about money. Just get out. And that's the way you're going to keep making money and keep your money. You just got to get out. You got to use your business sense, not your emotions, not your greed. You got to use your business sense if you want to survive with this. It goes up. You see, this is one. After you got in, 1, 2, almost touch the line. If you got nerves, you're still holding, and then going up, and then another big red candle right here. Now, you took a chance, and let's say you made $118, $9 more. You had 190 here, and then you had, now you only lose $1. You get out. Or maybe you lose $5 when you get out. But getting out here on your third red candle, this is the third one. I'd get out probably in the second one. But on the third one, if you decide to hold, then definitely want to get out, because you can see right here, it started going low. It didn't create a new low, because it's still a higher low. But on the third red candle, it couldn't pass the higher high. It couldn't go past it. So you want to take, that's a big one right there. And if you look at the RSI. The lows are almost the same here. How can that be? Something is not right. It shouldn't be. This should be a higher low. But the RSI is telling you the trend is going to change. And obviously, if you look at it, the RSI went up a little and it just went down, all the way down here. To a look, it's challenging even this low down here. See what I'm saying? And this is definitely a big divergence right here. It's telling you that even though this is a higher high here, this is a lower. This low right here is challenging this low down here. All right, and then it just goes sideways. Which, look at this. You don't even want to be involved with this, because look at this MACD. It's like the line is just basically on the zero line right here, all the way down to here, and then it just tanked. But it gave you a heads up. It pulled all the way back down here to 123, where it would have been where you got in, and then it tried to go up, but it just couldn't. It still couldn't challenge the higher highs over here. None of these could challenge it. So these are all signs that something not good is coming. You know, it's just not good. If you can't break these higher highs, it's not good. Over here, It let's see what we got here. 192 challenge. That its challenge is high again, and it still couldn't break it. Right? Just tank off. So what do you do with a situation? You get out. You get out here 10:16 a.m. You get out, right? You take your money out on the second one. Now let's go to the 447 puts. Let's see what that looks like. You get out on the 447 at 10:15, right? So let's see what that looks like. So let's go to your puts now. 447 put. Where are you? 447 put. Let's see what that looks like. Not much happening here. Not much buying and selling. All these lines are sometimes zero, low numbers. So you wouldn't even want to get them. Oh, 447. Sorry, I think I'm on the wrong one here. I need to go to 447. There we are, 447. Now this is more like it. So $49, and it went as high as $267. It opened at 94 from yesterday. Previous close was 94. It opened because of early morning trading higher, 168. But it did go down today at $49 and went back up to $267. Let's see when it did that. Probably when you were buying that call in the morning, early morning there. Okay, here we are. See, that was 10:15. 10:15, you got out of that trade, which was somewhere around. Let's see. Here, you see where it is here? You see that? You bought the call, you got out, you made the money, right? You made some money. So now you come to the puts because the call went low. If the call went low, the price went low, the puts went low. So now what you're going to do is you're just going to wait for your puts to push the price to go lower. But don't be fooled here, because this going low means that the price of the put option is going low, and this is why you see a lower price of $20 something on low of the day price. The high of the day price is going to be somewhere up here where these high candles are. So let's take a look at that. So you got out of your actually, when you see the puts are going down here, the calls are going up. This put price is coming down, but the call price is going up. Right? Puts going down, the call price is going up. But when you get to this point, you got out at 10:15 over here on the call that you chose. Right? And then if you come to the puts, same one, 447. You can see that if you watch that thing, you watch it, you keep watching it going down, and you just wait. You're waiting for a change in the market. Now this could have tricked you right here, because this change over here, and you could have gotten in and get out up here, or get out as soon as you get that line cross over here, the gold line cross below the green line. But I wouldn't have gotten in here. I would have waited and to see what would happen. It never really went that high above the zero line here. It just didn't. It just like, okay, let me try and see if I like it up there, and it didn't. Decide to come back down. So now you're watching it and it's still going down, which means if you buy this, you're losing money. You need for it to go up. Don't be fooled by the direction. With the calls and the put candles, if it goes down, the price is going down. You're losing money. If it goes up, you're making money. Even though it's a put, price is going down, but the put prices are going up. This is what this indicator is doing. It's showing you the put price is going up. So we get to this point here at 12:02 p.m. And what do we see here? We see that we have a low here, a red candle. Look at the spike on the RSI. It's way down there at 26. Now you see that, and it starts to come up. You see the next candle. It's a higher on the RSI. It's a higher number from 26 to 30 to 33, and then boom, you have the crossover here. It's going higher. First thing I look at is going higher. Check 1, RSI is going higher. Check 2, purple line cross the gold line here. See these numbers? Use the same numbers. That's all you got to do. Purple line cross the gold line here. Check 3, a gold line cross above the green line. The 3 above the 8 moving average. And then if you want to wait, you don't have to get in here. You can wait until hit the next candle where your 8 crosses above your 21. You can wait till you get to right here and get in. You pay $100 for this, and it goes up to $142 on a high with 1,000 people up there buying and selling. And then you can do the same thing it did with the calls. You can wait. You can wait to see what's going to happen. Now you see first pull back after you got in. It goes below the 21 line. It's still, you'd probably break even here. Okay? Or you can wait like I do. I try to wait for the second one. Now there is a crossover. RSI dipped really a lot. That's a lot. But if you were patient and you're watching this, you'll realize that the low that it went down. These are so many things you got to think about here. This is saying that you need to get out, right? Saying that you need to get out, but it hasn't crossed almost like the 50% mark here. If you see where it started here, this is around the 50% mark. That's what they do to get people out. They put you in situations that your emotions are going to just go wild. It's almost 50% here. Definitely you would want to get up because you're thinking, dang, you don't know how much further it's going to go because you can't see all these other candles yet. But it's your first pullback, and for me, I'll wait. Here are some things why I would wait. The MACD line did not cross under at this point right here. It didn't cross under. And now, the next candle after this low, it's a green candle. It opens above the open of the red candle. Well, that's a good sign. What else is a good sign here? The green volume bar is way bigger than the red volume bar here that just took it down to the low. Buyers are getting aggressive again. You see what I'm saying? The buyers are getting aggressive, and then it goes up, and it didn't even go up 20% back from where it fell 50%, maybe 15%. And it stops right here at the bottom of this red candle, which is support. Now it becomes a resistance. This big red candle right here, the bottom, the close of it, was a support for the red candle, but it becomes a resistance for these candles. And you see there's many candles here that are telling you, I don't want to go any higher, I don't want to go any higher, I don't want to go any higher, I don't want to go any higher. And then it tanks again. Normally you'd want to get out. You'd want to get out at this point, because I probably would too. But sometimes it's just not normal, and you see here this wasn't normal. It's still let me see. Still didn't cross it. Yeah, it did. The gold line crossed the zero line, 0.0010. Crossed it. Not a lot, but we still came back again with another big green candle here. This is where you have a consolidation here. You see, you had a lower low here. This had a lower low here than here, which is all indication to get out. But I'm a risk taker. Once I go in, I don't always win with this method, but sometimes I do. I would have probably held for a bigger for it to challenge actually this higher high and see what happens. I'd wait for it to see if it's going to come back and challenge this high, if it's going to break this high, and it sure did. It came back. It made an attempt here, didn't go halfway, but it made a second attempt and it went higher. It went higher and broke this high. So that, to me, for me personally, that's a good sign. And then it looks like everything is coming back on track here. It's back above my zero line here. I had a big green candle here when that happened, and then it pulled back again. I pulled back to my 21. Now I'm thinking at this time this is going to be the third pullback since I got it over here. I'm thinking, oh my gosh, I probably should get out. But what happened here? This was a red candle when it started out because it went down, and then it turned green and went up. In 1 minute it did that. So once I see that, it went back up above my 8 EMA. I'm staying. I'm hanging in. This here is kind of tricky. You have to decide for yourself here. You have to decide for yourself here. If you're just starting to trade, take your profits here and get out. Once you see this big doji or what they call a shining star, get out. You see that cross with the big line above? That's like the Star of David right there, telling you it's time to get out. So if you are a professional and you know what you're doing and you really know how this thing works and why these things go up and down, then I know most professionals are going to hold. And then you have, as I say, you had a big green candle here, cross above all 3 EMAs, and we're back in action right here. We're back in action. It comes down, it tests it, didn't cross it, and it just took off. Boom. Then it came back and tested again, and even broke the line here, but the MACD still didn't go below the zero line. Still didn't go below the zero line. The RSI is going down, which is an indication that the market is slowing down. You know, the market, this is making higher lows, and this is making lower lows. This is a good indicator that the market's going to change at some point soon. So anyway, it continues, and it went up again. Now this is your 1, 2, 3, 4th time. This is the 4th time it's challenging it. But for me, it went higher than just 10% of the length. If you look at the distance, it went down here. This went a lot higher than 50% of that entire length. I mean, this 50% mark would be somewhere around here between the high and the low. So this is a pivot point here, pivot high, and pivot low, which means it turned around down to go down here, and it turned around to go up here. And when it did, it broke through at least 50% of the difference between that high. So to me, that's a good sign. So I would hold. And then it came down here. The last time, it didn't break this lower low. This one didn't break this lower low, because if you notice, you have higher highs here, higher highs here. You have a lower high here, but you still have a higher low. Still a higher low, which is important. It means that the stock price is not going lower. The people are buying and selling. People are buying and selling because they're taking profits, but the stock price is maintaining a higher low. And because of that, the option prices are maintaining a higher price. So it challenged this low, it broke through that, went back up through there again, and then another higher low. So definite sign it's going to go up, and then it just took off. See, my MACD, since I got in, my MACD only challenged the zero line one time. It came up, it went back down, wasn't close to it, and then it took off all the way to here. Well, at this point, if you got in at, let's say you got in at $100, you would have gotten out here at 230, 240. And then you have this big red candle. Ooh boy, I'm out of this baby when I see this. That's a big boy right there. Not a lot of volume, but the price is dropping fast. It means sellers are skipping, like it goes from dollar. Let's see what it did. 230, 236 to 200. So it's almost dropping $10, $10, $10 right there. 30%, 30%, 30%. Only one shot. So that's a big drop on the option call scale. So for me, that would be my reason to get out. Now, as you can see, you can still stay in because it still created a higher low here, higher low, and it went back up all the way again to 243 and challenged this high. And it's doing the same thing it did here. It challenged this high, couldn't go even 10% up. It challenged it again, went more than 50%, and then the third time it challenged it, it broke right through it. Then it went back down and challenged this high, went up at least maybe 60% here, come back down, almost 60% as well, went back up. I'd say this was about 50% right there. And then it came back again, and then went back up. But as you can see here, it's all higher lows. This is important to remember this stuff. All higher lows. It challenged the zero line here, but it didn't go under. It pulled back here, and it challenged the zero line here again. It didn't go under. Went up, it pulled back here, challenged the zero line again here. It didn't go under. So you got to use all of these things together to make your decisions. All of these things to make your decision. You can't just use one thing. So you made some money on the calls, you jump to your puts, and you just wait to make some money on your puts. Alright guys? Well listen, I'm not a financial advisor. I'm just someone who's trying to help others gain the knowledge of earning an extra income. You know, times are hard, and we all know this. And this is simple. This is not even looking at a chart. You're just using the option plays to trade. You're not even looking at the chart, and this is free. Free like the bird in the sky and the fish in the sea. Free, free, free. You know, which is good if you're starting out. But you know, when you make enough, you should subscribe, because this is really a good thing if you want to have this thing with more indicators. When you subscribe, you get more indicators. They give you more charts and other things that you can use to help you make better decisions. They give you more information on the side as well. Please subscribe and share. Let us share this information with our friends and family so that we can all gain that knowledge of earning an extra income. This is the biggest money tree in the world, the stock market. The Forex, the New York Stock Exchange, commodity, futures. There's so much money floating around that if you learn to pick from any one of those trees, can you imagine once you learn it, you know, you can always make some extra money. You know, and depending on your budget, you can make a lot of extra money. And depending on your nerve. If your nerves get involved, then you're going to have problems making money. But remember, your goal is not how much you can make. It's how much you are not willing to lose. How much are you not willing to lose? Once you have those decisions made prior to trading, you'll always have money in the long run. Guys, thank you, and I hope this helped. Any questions, please put in the comments. And if you want me to make videos on anything else that you're not sure of, these lines, where you get them from, how they work, how they really work, how does this work, I can do that. Just let me know. It takes time to do all this stuff. So just let me know, and thank you, and bless it.